Today I want to dive into another fascinating Swedish microcap, one that's been flying under the radar but has some seriously impressive fundamentals. We're talking about OPTER AB, a high-quality SaaS company with strong economics and, in my opinion, plenty of room to run. So let's explore why OPTER might just be a little gem in a Swedish stock market. The entire market cap today sits at only 700 million Swedish kroners, or 70 million US dollars. OPTER AB is a software company that specializes in transport management systems. OPTER is basically the brains behind the logistics operations of many transport companies. Their platform helps customers optimize routes, manage bookings, manage payments, and streamline their entire workflow, making sure goods are delivered in the most efficient way possible. OPTER operates in a niche where customers have very thin margins. Any efficiency gains is very important for the profitability for OPTER's customers, and the software OPTER offers saves both time, resources, and money for customers. OPTER software costs basically the same as a single employee who takes care of almost all logistics in the business. The win-win situation is clear and obvious to everyone. One of the things that make OPTER so compelling is its dominance in a relatively underserved market. Unlike larger competitors that try to build one-size-fits-all logistics software, OPTER has doubled down on smaller and mid-sized transport companies. This focus gives them a competitive edge in a market where customization and reliability are key. OPTER today are the market leader both in Sweden and in Norway, while still having room to grow. Also, they are building their position in Finland and Denmark. On a longer time scale, management want to expand internationally, where Germany and Netherlands could be potential markets. The software as a service model has some great advantages. Revenue is sticky and recurring. There are high switching costs for customers, as it takes weeks and sometimes months of learning new software. It's much easier for customers to accept higher prices from OPTER than switching out their entire system. Changing your transport management software isn't like changing your Netflix subscription. It's deeply embedded into daily operations, and that means long-term, recurring revenue for OPTER. Let's look at some numbers. OPTER's fourth quarter soon comes out to finish off a great year. An advantage of the SaaS model is that we can use the numbers for the latest quarterly report and extrapolate the numbers and valuation from there. Rolling 12 months revenue is 87 million Swedish kroners. The latest quarter showed growth of 15% compared to last year. More importantly though is that annual recurring revenue showed growth of 20%, which is of course the number that counts. Annual recurring revenue is now 82.8 million, while growing 20%. The company therefore trades at an enterprise value to ARR of about 8 times. Furthermore, OPTER has great and improving margins. EBITDA and EBIT is basically the same, as they don't invest capital in order to grow. All investments are intangible and are not capitalized, but directly expensed over the income statement. EBIT margins were 33% in Q3. But for the entirety of the year 2023, EBIT margins were 23%. This difference between 33 and 23% operating margins shows the scalability of the business model and means that earnings and free cash flow will grow faster than revenue and ARR in the future. OPTER has great cash conversion because of the capital-light business model. The low need for reinvestment means that all earnings are paid as a dividend, giving a good shareholder yield, while still growing quite fast. OPTER benefits from a favorable cash flow cycle. Customers pay in advance, which means that OPTER gets paid before delivering their services. This is a major advantage as it reduces the need for external financing and allows the company to grow without diluting shareholders. Since the IPO, the total amount of shares outstanding has not grown at all, but remains at 6 million shares. Management are very shareholder aligned, and this is no American company giving stock-based compensation left, right, and center. On the topic of management, another key factor I look for in small cap investments is strong insider ownership and a strong management. OPTER checks these boxes as well. The company's management team own a significant stake, which means they have skin in the game. They're incentivized to make smart, long-term decisions rather than chasing short-term gains. The CEO is the founder and owns more than 20% of the company. OPTER is at an interesting point in its journey. Growth has been steady and management has hinted at potential expansion opportunities, most notably internationally. As long as the company doesn't get acquired, they should look to expand into Germany and Netherlands within the next few years. With a clean balance sheet, no debt and strong cash reserves, OPTER is in a great position to capitalize on these opportunities. Also, there is still plenty of room to grow in the Nordic region. Of course, no investment is without risks. One concern is competition. While OPTER has a strong position, larger players could try to enter the niche. However, the industry is highly specialized and OPTER's deep integration with the customers gives it a strong moat. The market is not that large that it should attract some of the biggest players in the SaaS business, and I see this as a little niche for OPTER to expand into and dominate. So far, this story has sounded great. What's the catch, you may ask? OPTER currently trades at around 9 times sales, which may sound expensive at first. But when you consider the high margins, strong recurring revenue, and scalable business model, this valuation starts to look quite reasonable. In fact, if the company continues to grow at 15 to 20% annually while maintaining strong profitability, today's price might actually be a bargain. Expectations are high and the company needs to keep growing fast and profitably. However, I deem the free cash flow yield of about 3% to be reasonable. This means that OPTER only needs to grow low double digits in order to justify the valuation. Free cash flow plus growth equals to greater than 15% in my conservative estimations. I see this as a potential long-term compounder who will grow while paying out a lot of dividends to shareholders along the way. So what's the bottom line? I see OPTER as a high-quality SaaS company with a competitive advantage, strong cash flow, and a long runway for growth. While the stock isn't cheap on traditional metrics, mainly 40 times earnings, I believe it's one of those businesses where paying up for quality makes sense. That's my take on OPTER AB, a niche SaaS company with strong economics, high margins, and an attractive business model. As always, this is not financial advice, just my personal perspective on a company I find incredibly interesting.